Hello, everyone. Welcome to Live Trading Thursday. My name is David Verbruggen. I'm going to be your host today. We're going to be going through some stocks to look at. Guys, you know the drill, right? We're looking for tickers from you, right? We want to see what the trades are that you want to look at. Last week, we had a fantastic session where we had several tickers thrown our way, and it was just a really good time to be able to look at some potential trades coming up, some different ways to approach the market. And so we're going to be doing that today as well. Guys, keep in mind that all the examples in today's live trading session should be viewed for educational purposes only and not taken as trading or investment advice. All right, guys, so let's take a look at the overall market here. We're going to dive right in. I always end up going a little bit long, so I figured let's just cut to the chase. Let's just do it, right? Looking at the overall market here, some interesting things. So remember last week we were looking at this potential M pattern, and then a couple things that I said. I thought that we might be looking at a move down, right? And guess what? I was wrong because we bounced right back up. Now I do remember saying that it's totally possible that we could move up, but I really truly believe that we would probably move down, then bounce off the 200, come back up, and bounce down off of this support line, which would have then been resistance and move back down to this trend line. I was pretty confident about that, and I was pretty wrong as well. That's just kind of how it goes sometimes, right? And I think I wanted to bring that up because there's several important lessons to keep in mind, right? So I got to view my notes here because I wrote them down. This is a perfect example of why we do not over leverage our positions, right? We want to make sure that we still have proper position sizing. Okay. Because if I was so confident, like, oh, yeah, we're going to move down, I just loaded up in some bearish positions, I would have gotten killed the next day. Next day was not just an up day, it gapped up and it moved up significantly. From the close of last Thursday to the close of Friday that's 40.60, and that's about 41.36. So, that's about 76 points. That's a decent move. That's a pretty decent move. If I loaded up on maybe some short-term puts, I would have been annihilated the next day. So it's a great example of why we don't over leverage ourselves. It's another example of why we don't pre-game the market, right? If I had gotten in at the end of Thursday, just expecting that we would move down without us actually breaking support, that would have been pre-gaming the market, right? I would have I would have not had that confirmation yet that we would have been moving down, and then I would have gotten hurt, right? Because it didn't make that initial move. We didn't let the market show its hand first. So if I had made that mistake, then that could have been a problem too. So that's why we don't pre-game the market. And the third thing I written down, this is also a perfect example of why we use stop outs, right? Because at times we're going to think based off of everything we're seeing, the market's going to do this or it's going to do that. And sometimes we're wrong. A lot of times we might be wrong, and that's perfectly okay, which is why we need to make sure that we have taken the appropriate steps and we've planned our stop out for when we're wrong, and we have gone ahead and followed that stop out plan as well. So just several things here that I want to kind of bring to our attention. And just because I thought this was a great learning opportunity, right? I really thought we'd be heading down further and we didn't. So there's several things here that I just wanted to mention just from a coaching perspective, right? I think that's important because it happens, right? We're gonna think the market's gonna do one thing or another, and then come to find out it just didn't. And so we need to be prepared. Okay, what has happened the last week, right? We had that big move up on Friday, and then this week, we've just been kind of choppy. It's almost like every candle's a little bit of a doji, and not Tuesday as much, but Monday, that's a little bit of a doji. Yesterday, Wednesday, yeah. Today, looking a little bit like a doji. We'll have to see where we finish today, but not a clear pattern, right? That's some resistance right here. That's some support right here. We're in there and we're just kind of chopping around, not doing much, right? It's like the market's really pretty unsure of what it wants to do. Now, we're trained to see patterns. I see another pattern potentially forming, and it's kind of a head and shoulders potentially, right? See that shoulder? It's like a big shoulder. And then you got the little tiny head, really because of that wick. And then we came up, and if we're down a little bit from the high of yesterday. So maybe that's the second shoulder. Now, if that's the case, then you would expect that we would move down, and we'll see what happens at support. But typically, head and shoulders, you'd move down from there. Now, again, I say, hey, I think that might happen. But I also say that knowing that last week, it didn't go exactly how I thought would happen. So that means I need to be prepared for anything. That means, again, proper position sizing when I do take a trade, because at the end of the day, I don't know what's happening tomorrow. That also means not pre-gaming it, right? The pattern hasn't fully developed yet. So I'm not going to go ahead and say, oh, yeah, that'll happen, and just jump in. And that also means that I need to have a stop out plan for whenever I get into a position. I need to make sure that I'm ready to get out without losing too much of the capital I put in there. All right, so I want to go ahead and cover that. Again, guys, go ahead and throw in the tickers. I see Watts, you've got one, Apple. We're going to look at that in a second here. Right before we do that, I want to bring up one more thing that we looked at last week. Last week, we put on a paper trade on Tesla. So I want to review that and see how that one went. We did this bear call credit spread because we saw that we had this strong resistance line. The stock had moved down. The 10-day was acting as resistance. And on this day, let me refresh here. This day right here, we entered that bear call credit spread. Well, then again, just like the market the very next day just shot up, so did Tesla, right? It shot up. And if you remember me saying, hey, the management plan for this bear call credit spread is if it breaches the short strike. So right here, if it breaches that short strike, I'm going to punch out. So that's what I did. I'm not always great at being able to manage some of these paper trading, some of the paper trades that we've thrown on the webinars, but this one I was able to catch, and I did get out the very next day. Now, you might be thinking, oh man, well, that's another one you got wrong. Well, we're looking at over the next 100 trades. That's really what we're looking at, right? When we are trading, we're not looking to be right on the very next trade. It's not about that trade. It's about, are we profitable over the next 100 trades, right? Do I want to be right, or do I want to be profitable? I don't care so much about being right. I want to be profitable in the long run. So on this one, part of helping us become profitable in the long run was making sure that I cut the expense as little as possible. So I want to make sure that my expense doesn't get bigger than what it should be. So as soon as it breached my short strike, I went ahead and I took the expense. I bought that spread back and got out of that trade. Now, I think that was a good call because look at the next day. We would have been deep in the money on that short strike. Yeah, the following day we would have been outside, and then back in and back outside. This is not something I want to mess with, especially not on a volatile stock like Tesla, right? So it was a good call to get out of that trade. That was our plan anyways, right? If the short strike is breached, that was our plan to get out. And now we can keep an eye on this and see what other trades we might be able to have. It's sitting right there now, moving up a little bit off of this line. And if it punches up again, I wonder, just catching my eye here, is that a line to consider? Right? We can now get rid of this. So is this an uptrending support line? I don't think it's proven itself yet, but if we come, break some of these highs, maybe break the 50-day, be like, okay, that might be a line to consider. And when Tesla gets hot, it can really get hot. So that's something to consider. All right, Watts, we're going to take a look at Apple. Let's see what we got here. Thanks for putting that one in. Apple, the question is it ready for a potential put play? Let's take a look. Okay, so this has been a fun one to look at. You're probably seeing a little short-term resistance right in here. So let me grab that line, put it up a little bit higher, right about there. That's probably what you're seeing right there. You're asking, is it ready for a put play? Okay, I'm going to push back on this a little bit. I'm going to say no, and here's why. Overall, what is the trend? We're kind of going from the bottom left of our screen to the top right. Apple in the last few months, since the beginning of the year, really, has been very bullish. Opened the year about 125, now we're about 174. Okay, so that's what is that, 40% or so? 35, 40% move up in the last few months. And it's been pretty steady, right? I mean, this support line recently here has been a pretty good support line. A little gap up on earnings there. Earnings was good. Yeah, you might expect that this might pull back a little bit. Is that worth doing a put though? Is it worth doing a put if we just pull back a little bit? I don't think so, right? I would rather have this thing pull back and then you get into a call or a bull put or a bull call. But trading counter trend is going to hurt us more than it is going to help us. And especially when you get some of these tickers like Tesla or Apple, which have no problem making big moves. If it makes a big move against you, you can be looking at a pretty big expense as well. So I would not be looking to Apple to do a put play, even though it has a potential of coming down. But even then, look at it recently. It's still above the 5-day. In fact, today, it has bounced up off the 5-day EMA, right? What has the pattern been on Apple? Move up, ride the 5-day, come back down, find a bounce, and up, ride the 5-day, come back down, find a bounce, up, ride the 5-day, come back down, up, ride the 5, right? Same thing. Now we're bounce back up, ride the 5-day. Again, yes, it is possible to make money on these little tiny moves down, but it's a lot easier to make money if you just trade with the flow, trade with the current, let it come back down, get that call option, and then move up, right? So that would be my advice there. Just to, if you're paper trading that, go ahead and go with the trend. All right, Watts, want to look at a potential call play for General Electric. That's you're finding good patterns. Both of those have kind of been on my radar for good patterns. So good job there, because I've been watching both of those guys. Okay, General Electric. Now I like this better, but I wonder if General Electric is actually cooling down a little bit, right? For a while, let me reset that zoom. For a while, is trading within this range pretty nicely, and it's almost starting to break out of this uptrending channel, if you will. See how it's down below this support line, but it's still above the 20-day, and the 20-day has been acting as support for a while as well. So I wouldn't say that this thing is bearish by any means. It's still holding at the 20-day, but we look at, if we were to throw a line on here, you can even downtrend that just slightly. We're kind of looking at this right here, and it's starting to flatten out just slightly. I don't think I would want to do a call option on here. Now, we've looked at some credit spreads in the past. Could we still look at a credit spread, if we were to do a 98 by 97 a week or two out? You still have your short strike below the 20-day. And when's the last time that it got below the 20-day? Last time GE traded below the 20-day for any serious amount of time, besides, a few minutes on a wick. It was down here. It was last year, guys. It was last year. All year so far, it's been above the 20-day. So even though it's flattening out, I think you have an edge if you structure a bull put spread where the short strike's below the 20-day. And if it comes and it breaches that, yeah, you buy back that spread. You could roll it out and down, maybe get below the 50-day. There's things you can do just depending on what your management style is. So I like, Watts, I like the direction you're going better for General Electric. I might just switch the strategy just based off of what we're seeing. All right. All right, cool. Benjamin, glad you're on. I always know that you're going to bring some good ones to look at. Benjamin wants to look at ADP, MRO, and PMTS. Let's take it from first one, ADP. All right, so we've been looking at this one for potential bearish opportunities. You can see it's definitely moving down. The 50 days resistance, Ooh, little pop up above there, but then we hit this line, right? And I hit that line pretty nicely and moved down as well. So our bearish pattern mostly still intact here. Big move down today, right? So this is one I would watch, but I'm not sure that it's a great time to put a trade on, right? I'd love to see this thing pull back up and maybe bounce off the 50-day again. But it's I mean, even today, down quite a bit. So that makes me think, if anything, it might start pulling up a little bit. And if it pulls up a little bit to come back and we're in a bearish trade already, we're going to be losing initially on that trade and just make it hard on ourselves. So why not wait for it to come back up? That's what I think would be the best option there. MRO, let's take a look at Marathon Oil. All right, let me get a new trend. I don't think I have. All right, that line, I'll zoom in on that. That's a pretty decent line right there. So Marathon Oil in the last month been bearish here, right? And I will say it seems like when it does bounce down off of this downtrending resistance line, it's tough to catch, right? Look at this day. That's an up day. You get a little wick, and the next day it gaps down and moves down. Same here as well. Gap down, move down. Well, that one actually hit that would have been a decent one to catch right there. Yesterday could have been a decent one to catch. Today, it's already moved down a bit, right? Not the best buy point, but that doesn't mean there isn't something we can do with it, right? The 20-day acting as some resistance, 20-day resistance, 20-day, 50-day. What if we can structure a bear call credit spread with a short strike above the 20-day, right? That would be, if I'm looking at, what can I do with this trade? Earnings behind us, by the way, so that's good. What can we do here? I'm thinking maybe a bear call. Let's see if we can set up a 24 by 25. What does that look like? We'll try a month out. I'm just curious. I want to see what next week Friday looks like. This is gonna be short, and it's probably not gonna pay anything, but I'm really curious right now. 24 by 25. Yeah, I didn't think it would. Okay, so we're gonna look now at about a month out. It's May 11th. Hey, let's just go June 16th, right? That's 36 days to expiration. We're gonna still look at that 24 by 25, and look at that. $21 of potential profit for every $79 of risk. That's pretty good, right? That's about 26% max ROI. So if we were to do that trade, and I should double check. So open interest is great. Bid ask spreads fantastic. That really looks pretty good. Now let's draw this on our chart here, and let's look at it one more time. We might put a paper trade on this guy. 24 by 25. We're going out to June 16th, we said. Right about there. Perfect. This is what our credit spread would look like. We got the short strike above the 20-day, which has been some resistance. And we got the 50-day coming in pretty soon here to act as another protection line. And we've got this downtrending resistance line. Let's zoom out and just make sure there's no red flags there. Move down, move up, move down again. Here's some support I could see. Let's drop a line right here. So some support in that area. We're getting close to that. That doesn't mean we can't do this trade. It just means that we need to be ready if it decides to bounce up off of there. But that's why we have. That doesn't mean that we don't take the trade, right? Just because it could potentially move down, bounce up, and come hurt us, it doesn't mean that we don't take the trade. That means that we have a management plan in place to protect ourselves, right? So let's go ahead and let's do this. So we're going to do June 16th. Again, we're just putting on a paper trade here, right? This isn't to tell you that this is going to be an absolute winner. Because like we saw from last week, we put on a paper trade on Tesla, and guess what I did the very next day? I managed that trade. I reversed it. We took an expense there. Okay, so here we go. Potential 22 for every city. We'll go ahead and do 10 contracts. Now I have the potential making $220, and we're risking $780. And we're going to hit trade. And for the sake of time, I'm not going to try and get in the spread here. I'm just going to leave it at the 22 cents of credit. I want to double check I'm in the correct paper trading account. Hit review, hit submit. Again, if I'm moving quickly here, these are all recorded, so you can watch this on Facebook later on. And it says live, so it's gone to the market maker, has not been accepted yet, so we'll give it a minute. We're going to look at the next one that Benjamin wants to look at, and we'll come back to that one. Oh, wait a second. We got solid lines here. I think it just took. Yep, okay, executed. Just literally went through. So now we are in that position. So then the first thing I like to do, you guys probably know, I like to take profit at 50% of max credit, right? So we received a credit of 22 cents. So hey, if this devalues to the point where the spread is only worth 11 cents, hey, Mr. Market Maker, please let me buy it back. That's what we're going to do right now. I'm going to hit close. I'm going to type in 11 cents. And I want to select the duration to good till cancel. So it's going to stay in past today. I'm going to review that and submit that and hit continue. So now it's all in the system, ready to go. It's live. And if that stock moves down some and this spread devalues down to 11 cents, and this live will turn to executed when they take that trade off the table for us. So that was a good one to bring up. Let's see here. PMTS, I think, was the next one. PMTS. All right. Whew. Interesting one. Okay. Earnings just a couple days ago. And look at that. Obviously, whatever happened on earnings, they didn't like it. Massive move down. So, Benjamin, I know you like to do this once in a while, right? Throw in some fun ones to look at. Definitely a fun one to look at, but not really tradable right now, right? I mean, it's lost not quite half its value, maybe 40% of its value in just the last few days, just this week, right? So pretty big move down. Not a pattern, not a clear pattern that we can trade. So we'll just move on. I see Hood being one to look at. Robinhood. Here we go. Ooh, okay. Robinhood. Trading within this channel. I don't know if I actually even have this one on my rolling stock. I'm going to put on my roll. You see, I got a few different watch lists here. Downtrends, uptrends, rolling. I'm going to add this to my rolling stock watch list. Now, can't do anything with it right now. Earnings just happened yesterday, so that's behind us. That's good. Big doji day today. This would have been such a beautiful entry if only earnings wasn't right there. So yeah, get this one on a watch list, right? Why? Because it's a pretty pattern. It's trading in that range. It's a pretty pattern. Guys, imagine what we can do with just a simple stock trade, right? Imagine if you saw this pattern and right in here, let's zoom in on this. Right in here, it comes back into the channel, and right here, you just do stock. You just buy stock at $8.73. You decide, okay, our resistance line's about 11.50. Maybe at 11, I'm going to go ahead and take profit, right? And you're going to be in it for 2-3 weeks, and just before earnings there, about $11, you're able to get out with a profit of 25% or so on a stock trade. That's great, right? So yeah, get this one on a watch list. That one's looking good there. All right, Jeff. Hey, glad you're on today, Jeff. I said on May 5th, entered a bear put on MRO. Okay, bear put 23 by 22.5. Let's go back to MRO so the 5th, that was, here we go, 23 by 22.5. Is that right? Sorry, guys. I'm switching between two different screens here. So, okay. So the next day that you would not have liked that, right? Actually, would have been a couple days. I'm not sure if you're still in it, but if you're in it right now, you're probably pretty happy. Now, if your expiration's tomorrow, you should probably be in a profitable position right now. Might be time to consider taking that off the table, right? If you're in a profitable position right now, if 23 by 22 and a half, you're through both strikes right now. So that's a pretty decent trade there. So good work. All right, guys, I love the interaction here. Yeah, just says 519. Okay, so next week, yeah, next week is the expiration on that one. We're going to look at just a couple more, and then we've got to wrap it up here. So GameStop and PRI. We'll take a look at those, and then we're going to call it. GameStop. Let's zoom out here. I'll go 1 year. GameStop's an interesting one, right? It's one of those Reddit stocks, and so it's had some interesting things happening, and even I feel like people are still watching it. They're just kind of watching and waiting for some crazy move to happen, right? Even though the volatility's really come down quite a bit, that might be a line worth considering. So if you're looking at that and it bounces down, this could be a decent look for a bearish move. How far? Maybe only as far as that, because you can see this gap line right here. And that coincides really nicely with the previous bounce, right? So it wouldn't be much of a move down, but I mean, percentage-wise, it's still decent, about 10% move down, right? With leveraging on options, you can get more than that. So that could be one to consider and to watch there. All right, PRI, and then we're going to wrap it up. Hey, that's a good looking pattern there. You can see this uptrending support line 1, 2, 3 touches. It's gotten sideways here. Love to see this thing come back down, maybe produce a bounce, right? So it's a good one to throw on a watch list. Did some crazy moves in here. Hopefully that volatility is over. Earnings behind us though, so that's nice too. I know a few weeks ago everything we were looking at was earnings, watch out, but finally most of those are now behind us. So hopefully this guy can kind of move sideways or move down slightly, produce a bounce, and then there would be some opportunities there. So, all right, good one to throw on a watch list. All right, guys, I want to let you guys know because you guys are throwing in some good tickers, right? Throwing in some good tickers, some good questions. We have our Trading Jumpstart Challenge. That's going to be in 2 weeks. Let me get rid of this here. There we go. In 2 weeks, we're going to do our Trading Jumpstart Challenge. That's going to be May 22nd through 26th. What is the Jumpstart Challenge? It's a full week long of education and training with our coaches. I'll be on a couple of the days as well. And this is where you can go into the market with coaches and just start working on your plan, right? Learn more about trading, learn about the tools that we can use. In this live training session today, we only have 15-20 minutes. Sometimes it's closer to half an hour. But what if you could do 2 to 3 hours a day, Monday through Friday, with coaches at a very ridiculously reasonable price, right? Check out the link for more information there. You can get the schedule. You can see what we're going to be looking at, and you can see the price there as well. So, guys, it's worth your time to be a part of that Jumpstart Challenge, and it's really just it's designed to get you from just being a spectator on the sidelines to just like jump charge you, get you fuel so that at the end of the week, now you're participating, you're active, right? You're looking at things, maybe not real trading yet, but at least paper trading with some knowledge and with some confidence. So that's what we want to be able to help you accomplish. So check out that link in the chat there. And that's going to wrap it up for today. So guys, we're going to see you next week, and have a good one.